All right, welcome back to another episode of Proof of Vision. If you are a points maxi, today's episode is definitely for you. We had on Kenton, who is the co-founder of Rumpel Labs, um, talking all things points. Rumpel has built a platform to trade points in real time. So if you are a points farmer and you're looking for instant liquidity, this episode is for you. Talking about the opportunities behind Rumpel, the risk associated maybe with providing liquidity. And I thought Kenton did an awesome job of kind of describing Rumpel and the long term vision and the benefits to the market that Rumpel can provide. So again, really great episode. Hope you guys enjoy it. Obviously, if you do, please like and subscribe, and we will see you next time. All right, welcome everybody back to another awesome edition of Proof of Vision. We're recording here on a lovely Friday afternoon. We've got Kenton, the co-founder of Rumpel Labs. How are you?
I'm doing all right. And you, Kirk?
I'm doing awesome, man. Doing awesome. Another day, another lost dollar. I think in the market. If we're being honest, right? It's been tough, but we persevere nonetheless. Um, Yeah, so I always like to start off, asking about your background. Can you tell us a little bit about, your journey into crypto? What were you doing before this? And then ultimately, like, paint the picture of like how you ended up coming up with the idea for Rumpel, and the product that you guys are trying to serve in the market here.
Sure. So I come from an engineering background. I went to school for aerospace engineering. Thought that I was going to work on rockets, but ended up learning about crypto in 2017 and just fell down the rabbit hole like everyone else. It was around that time that I learned about MakerDAO and soon thereafter joined them to help launch multi-collateral DAI. I was um, I was an engineer here there from 2019 or 2018 to 2021, and then at Maker I saw that there was a lot of interest rate volatility in the borrow rate, and that was a pretty big pain point for the borrowers at the time. If you remember, there were people using Maker to borrow against their ETH and buying cars, buying homes, and so there were external, like real world use cases back then, and still today, but especially back then. Um, and the rates were moving a lot from in 2019. The rates moved from about 5% all the way up to north of 20%. And so that problem was something that I began thinking about with my co-founder, and we built a protocol called Sense that was our first like project in the space. It was a fixed income protocol, um, and that was after MakerDAO. We ended up shutting that down after about a year and a half after realizing that there wasn't captive demand for the fixed rate. Um, and it was in early 2024 that we were tinkering with ideas and thinking about like where are the real problems in DeFi. And around that time, points were starting to take off. You had Athena with the fastest season one point program ever. You had EtherFi, which hit a massive airdrop as well, but still users didn't have a good way um, to transform their rewards. They were receiving points. They were waiting for the airdrop. It was an uncertain payout at an uncertain time, and so it was clear to us, while we were trying to actually sell our own points. It became clear to us that it was a problem worth solving, and so that's how Rumpel was born.
Gotcha. Yeah, I mean, it makes perfect sense. I think especially, as these points programs have proliferated and they've gone on, and there's obviously more and more of these things coming out all the time. It makes sense, I think, for a lot of users to want to kind of like, exit ahead of time because it's uncertain. And if you can get liquidity on points now, why wouldn't you, right? Um, I think one of the protocols that came to mind that I think was really trying to serve this early was Whales Market. Um, I think they were trying to do something similar. Take me into Rumpel now. What are the differentiators from Rumpel, maybe to like Whales Market or some of the other like points markets that we've seen? And like what problem are you solving there versus maybe like what some of the other protocols were offering for points?
Yeah. So Wales is a great example, and a great one to start with, in part because it was the product that we tried to use ourselves when selling our own Athena points, and it was while using Wales, or it was through using Wales that we discovered the the immaturity of the space. So I remember when I was with my co-founder, we had some Athena points he were trying to sell. There was a great price on the page, but when we attempted to sell, it required that we locked up collateral on our side, which was not the intent. The intent was that we have some point exposure, and we'd like to get money for that point exposure now. But what Wales permits is it allows you to agree on a price now, but then settle at the point of the airdrop. So it's Wales is more of a speculative tool. It requires capital on both sides, and it doesn't allow you to unlock the full value of the point exposure, and it because it's not as capital efficient, deep markets can't form. Um, the other example that people often compare hairs to are fixed rate markets. So this is like a Pendle, this is a Spectre, Hourglass, etc. And these are marketplaces where you could trade future claims to points. So if you're someone that if you buy a YT on Pendle, what you are buying is the right to a future stream on some notional principle, and any points that you accrue through that YT, you own, and you can't part ways with it. You could sell your future claim if there's some days left. You could sell that future claim to someone else, but the points that you earn are still yours, and that was an attribute that we wanted to better serve with Rumpel. So the way that it works is, with Rumpel, we allow users to earn points through a personalized, unique Gnosis safe. So everyone has like a Rumpel wallet. They deploy capital through that wallet, and they earn points. And any points that they earn in that wallet, they can then tokenize into an ERC20 and trade that on chain. And the reason why we do this is because we allow users to do basically anything that they want, except for claiming the airdrop that their wallet has a claim to when the airdrop happens. And so because we do that, we can feel comfortable with allowing users to mint points and sell them. So if someone parts ways with their points, they can't come back and claim the airdrop and like double dip effectively, because they cannot claim the airdrop. Uh, the protocol has the ability to claim the airdrop on behalf of them and then pool it into a vault, and then anyone with a point token can come and redeem it. So, yeah, what does this architecture unlock? It unlocks better a capital efficiency. It unlocks deeper liquidity.
This episode is brought to you by Pendle. Pendle is a leading protocol in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing assets in DeFi. This allows users to speculate on future yield or earn a fixed rate on their assets. Learn more at pendle.finance.
We can conform around any point-bearing strat. On Pendle, you can only conform around certain strats, ones that give you a receipt asset. But for us, we can enable point selling on like looping strats. We can tokenize points that accrue from boosts. Really, any way that wallet can earn a point, that point can be brought on chain. So and the last thing also is that all of the price discovery and liquidity can coordinate in a single market. Whereas like on Pendle or Hourglass or any of those other fixed rate markets, liquidity is fragmented across tenors.
Right. Yeah. So yeah, you run into the problem where, there's different maturities and therefore, you've got to provide liquidity as a liquidity provider to different pools versus a unified pool. That makes sense. I think the hardest thing to do, is to price these points. So walk me through that a little bit. Like how does Rumpel price the points, or does Rumpel do it, or like how does the price discovery actually happen for the points? Because it's a lot of things are unknown, right? Like it's unknown what the FDV is going to be when the protocol launches. So like walk me through that a little bit on that side.
Yeah, point tokens are kind of like airdrop rights. And these airdrop rights are the value of the airdrop rights are a function of many things. It's a function of when the airdrop is going to happen. It's a function of the airdrop size that the points have a claim to. It's also a function of how many points exist the moment that the airdrop happens. And then, like you said before, the first day FDV. So there's so many variables, which is both good and bad. I think that it's in general, whenever there's a lot of variables, the buyers of these points will require a larger discount. But ultimately, point sellers, which are on the opposite side, like they are getting liquidity now, and so that's essentially what we are offering. So it's a price discovery is free market driven. So it's not set by us; it's set by the market of buyers and sellers. Every point token trades in their own Uni V3 pool. And what we're giving to our users on one side, we're giving certainty and liquidity to our point sellers. And on the opposite side, we're giving discounts to our buyers. Discounts on airdrop claims, discounts on governance coins, etc.
Gotcha. Okay, gotcha. So it makes sense. So essentially, it's so the market kind of prices in, and I guess it would probably vary per project. What kind of discount a buyer or a seller is willing to accept.
Yes.
So I mean, the underlying liquidity comes from Uni V3 pools, right? But like, or am I submitting an order as a user? So like, am I submitting an order and am I submitting an order hoping that it'll get filled or hoping that it'll get met? Or the trading in the Unity 3 pool is actually dictating like what the current price is. Like, walk me
The
through that a little bit.
Yeah. So right now there are existing LPs in our pools. We have our own points program. So we're issuing straw. We hope to reward straw holders in some way in the future. We just haven't decided how yet. And these LPs are passive buyers and sellers of points. So they provide liquidity on Uniswap, and buyers and sellers can instantly trade against that.
Gotcha. Okay. Um, gotcha. No, that makes sense. And so is this a permissionless market? Like if I'm a project and I have a points program, um, is it permissionless to list, or is there a listing curation process that happens through Rumpel to be able to get my points activated onto the market?
There's a listing process now. We are fairly open towards any projects that want to onboard. We just rank them by the expected impact. This is this is like our short term operation. We're currently working on ways to enable permissionless listing, which would help to accelerate our expansion across the space. So the end state is that if you have either as a point issuer or even as a user, you could arrive and create a market with a single function call and get liquidity as soon as you find the opposite side to the trade. So that's the like end state.
Gotcha. What are give me some examples of some partners that you guys have worked with so far, with their points programs, and like, um, I'm just trying to think, like, do you think it's a matter of, because like on one end, I think one of the reasons why the points programs have been so successful is because like nobody can price them accurately, and so like people's speculative mind runs wild with like what the price could be. So that's why I think Pendle YTs have been so attractive, because you're speculating on like what this implied leverage is exactly, which you don't know, right? But you're thinking in your mind that it could be very lucrative. Versus like with Rumpel, if I'm a project, I work with Rumpel, and now there's kind of like a price being set for my points, and it kind of like caps the upside there. So like, what's the response been like from like some of the projects, I guess, or like what's the that's my train of thought at least. But like, what are some projects that have come to you that have started working with Rumpel that are some examples there? And like, did they ask these kind of questions, like, or do you think that is a roadblock to kind of like the points mania is actually putting a price on these things?
Yeah. So at the start of the points mania, there was a lot of speculative energy that drove the implied valuations of these points higher. And um, without a price to bring people back to earth, the implied valuation can kind of live up in the stars for a long time. But that behavior only exists for when the market's hot and when like this speculative energy is high. People are optimistic, and for especially hyped projects. So that premium that we see on point valuations only exists within one regimen. The opposite can also be true if the market as a whole becomes more pessimistic, and if we're talking not about a very hyped project, but instead one that is still trying to get find its legs, right? And so in that case, there's users don't value the hit points at all. They will actually apply a zero $0 value on those points. And so our pitch to projects is that, hey, we are going to give you we Rumpel allows you to build certainty into your incentive program and its ability to influence, right? So instead of these like large um, low valleys, high peaks, we he could reduce that and allow your market to demonstrate value in its incentive program. They hereby creating a floor on what users perceive to be um, the value within your incentive program. And we think that like every project is a business, right? They're all trying to de-risk, and they actually value certainty. And we think that an incentive program that brings more certainty into one's operations is net better for them over the long term.
Gotcha. No, I think it makes sense. And even as a project, I guess thinking through it further, like I think as a project, it would still benefit me to have both like a Rumpel integration and then also a Pendle integration. So that way, if people want to speculate, obviously you can go to something like Pendle. If you're looking for certainty, you're looking for instant liquidity, then we have that for you through Rumpel, right? So it kind of makes sense from the project standpoint, I think, to have both going on at the same time. Quick question, going back to go ahead. Yeah, go ahead.
If both actually exist at the same time, though, we actually have the ability to onboard Pendle YTs. So this is a pretty like exciting like synergistic integration. Anyone who is holding high fees on Pendle can deposit those YTs into their Rumpel wallet and get liquidity for any points that they earn. So that's like this like win-win scenario. It does also connect the markets slightly. So now the price on Pendle creates this like loose ceiling on Rumpel.
Yeah, yeah, it's really
Because
interesting, actually. Yeah,
because if the implied evaluation of points on Pendle ever exceeds the implied val on Rumpel, you could buy on Pendle and then accrue point tokens on Rumpel and then sell for a profit. And that's actually what a lot of users are doing now, as price discovery occurs in Rumpel's markets.
yeah. No, it's super interesting, actually. Like the opportunities that actually unlocks. Going back to the LPs for a minute, like one of the things I want to wrap my head around too, though, is like, okay, so let's say I sell my points, into the LP. The LP itself is actually taking possession of my points then, right, at that time. Now, when the airdrop happens, you know, I guess what I'm trying to say is it's possible for like the LP to lose, right? Because maybe the LP didn't price them properly. Now the airdrop happens and the FTV is not what you were pricing it as the LP. Or, you don't sell on time and now it's tanking because that happens a lot with these airdrops. So in my mind, it can be very, very risky to be an LP, right? In that
At the wrong
scenario.
price.
Right, at the wrong price, right? So then it kind of becomes a scenario where like to be an LP on Rumpel for these pools, you've got to be a very specific type of LP, right? With a set of expertise, right? That really
Yeah.
lets you take advantage of that, where you have an edge. Do you think that that's a barrier of entry for like building significant liquidity in these pools? Is because like I don't know if an everyday Joe, like me, for example, should come in and LP on Rumpel because I don't really have those expertise. I can't price that.
Yeah.
How are you thinking about that? Like maybe it's a nothing burger, but that's just something that's in my mind now, I guess.
Certainly. Yeah. LPs need to be aware of the risks that they're taking on. There are two things that we recommend to LPs within Rumpel if they are more risk averse. The first one is to have very long range or orders, go from the current price all the way down to zero, and that allows you to distribute risk. And the second thing isn't to actually have an offset to not go up to the current price, but instead go up to like 10% under the current price. One other thing that will make the second path easier is when we onboard Uni v4 pools. So Uni v3 pools its fee structure is capped at 1%, and with Uni v4 we can have any fee pool or any fee set within a pool, and so we think that sellers are still going to sell and buyers are still going to buy, even when the fees are set to a rate that's more that compensates the LPs for that risk. So something closer to like 10 or even 15%. And the reason why that it has to be that high is because of this vol that exists within point evaluations and the unpredictability that can occur that would thereby cause large swings. And so when that happens, when we onboard those pools, it should be LPs won't need to worry as much about path two. So as long as they spread the liquidity across long orders, I think that they can manage their risk a bit better.
Yeah. It just, because the volatility could probably be pretty intense, on something like this. Like, I'm just thinking about so let's take this Elixir example. I don't know if you followed this, Elixir airdrop or this Elixir campaign. Yeah, a little bit, right? So like obviously things are developing in these points programs in real time. Project comes out with an announcement that kind of throws a curveball into the entire program. There's more points now. There's more dilution now. People are freaking out. People are coming to Rumpel to sell because they're freaking out, right? And then like now all of a sudden there's this crazy volatility happening, right? And so obviously that can be very profitable, right, for an LP. But because it's Uni v3, right, they've got to constantly rebalance, right, and manage that IL, I would imagine. So I think like even like I'm just thinking like a layer further, like even some of these automated liquidity management protocols that can build on top of like the Rumpel pools. Probably have a really, really good use case there, because you're looking for, pools that are going to have a lot of volume. And I would imagine that, I don't know what the traction's been like so far. I want to ask that. But I would think that like points trading obviously has a ton of volume on Pendle. If you could actually sell them and get capital now, then you're going to have probably a good amount of people, throwing volume through these pools, right? And so just thinking like step further, like even like an automated liquidity manager on top of these Rumpel pools, I think makes a lot of sense, because you probably have to rebalance quite a bit, right? Or you have to, you have to provide liquidity across like such a wide range, right, that it becomes, a little bit less capital efficient. It's really interesting, actually. I'm glad we're having this conversation, because like my mind is just, going off in like 15 different directions on like the capabilities that it unlocks.
And the great thing too, the thing that we're really excited about at Rumpel is the positive externality that point pricing brings for everyone. It helps users understand the value of the points that they are earning. It helps them understand the amount of value that they can get right now, and it also gives insight into how the market is pricing points for the point issuer. Right now, a point issuer can go to Rumpel and see how their points are being priced, and if they are uncomfortable or disappointed with that, they can adjust their points program to juice and boost the real yield that their points are offering. And this is like I fully expect coin issuers to have an eye on their points and try to optimize the incentive power that their points program offers. So just to follow your example, there could be a massive like that announcement and dilution event, but if the point price tanks precipitously beyond what the project was expecting, the project can come back and announce something else like a larger airdrop allo that would do the exact opposite. So I fully expect there to be like real opportunities on both sides, both for sellers and buyers as these markets mature.
Yeah, no, it's a good point. It's an underrated point too, right? Like it creates this feedback mechanism to the protocol itself that like, like right now, what are they doing? They're listening to complaints in their Discord. They're looking at complaints on crypto Twitter. They're getting feedback in like these social ways. But the market can actually give you the feedback on the pricing, which makes a lot of sense, right? And it actually helps. And I think too, like and again, I'm not here to judge anyone. Like, it's very complicated to run a TGE and to structure a points program, more complicated than people realize. But it kind of, I think the overall sentiment from users in the market lately has kind of been like, man, we're getting farmed, we're getting screwed. But I think part of the problem is that like they don't have a good way to like really communicate with the protocol that they feel this way until it's time for the TGE to happen. Airdrop's about to go out, and now everybody all of a sudden is pissed. Again, it hurts the token price, but this kind of creates kind of like incremental feedback moments for the protocol and the users to really communicate. And I think that's actually a very, very underrated mechanism of the Rumpel model, right?
And it also leads to like healthier interactions between users and projects, right? Users that have the ability to exit to someone else, to a more optimistic user, encourages like it gives them what they want. They're less disgruntled. Mm-hmm. The other user is probably like really happy. And all the while, their decision to sell is captured as information for the point issuer as well. So,
yeah, really interesting. Question about, I guess, the Rumpel business model, right? So, where does Rumpel make its fees? Where are you guys coming into play with like the economics here? Where are you guys earning your fee?
Yeah, so we are not earning a fee now. And if we don't expect that Rumpel Labs will be earning a fee. If that does change, he'll be announcing it well in advance. There is a fee built into the protocol layer itself, and it occurs on minting and redemption. So if you are someone that mints point tokens, he'll get a fee on that mint. But if you hold your point tokens and then redeem them, then you'll only be charged once. If you are someone that buys point tokens and then redeems them for the airdrop, then he'll be charged once as well. So a point seller and a point buyer are charged once, and a trader that buys and sells before an airdrop happens is not charged at all. And we designed it that way to allow the market to flow freely.
Alchemix Finance empowers you to spend and save at the same time with a self-repaying, interest-free, non-liquidatable loan. Deposit your assets and access your future yield today. Available on Mainnet, Arbitrum, and Optimism. Head to alchemix.fi to get started.
Yep. Gotcha. Yeah, I mean, you want to encourage the trading of these points, right?
Exactly.
The more trading, the more fees in the Uni V3 pool, and you don't want to just stack fees, on top of those participants, I would imagine. Gotcha. No, it makes sense. So obviously, kind of like the points meta, I guess, right, is kind of what Rumpel has built its business around, right? And so you're kind of anchored to this theory that points will continue to exist and that will continue to proliferate and be very popular years and years from now. Um, how do you feel like points have evolved from like you mentioned, I think Eigenlayer, EtherFi, and Athena kind of like brought this points meta. I mean, even before that, you could say Blast. Some Solana projects were doing points, but like really, I think Athena and EtherFi and Eigenlayer, like that whole trifecta, really like ushered in this points meta. And since then, I have at least noticed like kind of a downward trend in sentiment from users for these points programs. But like, what? Just want to get your thoughts on like points as a meta. Do you see this continuing to grow and kind of continuing to be like the go-to strategy for projects trying to bootstrap their economics and their apps? Talk about that a little bit.
Yeah. So counter to what's said on crypto Twitter, the points meta is still very much alive. It commands billions and billions of dollars in capital, and on an implied valuation perspective, it's projects are allotting like almost $1 billion a year worth of points or point airdrop claims. So if you look at the data, it's still alive. It's still influencing user behavior. And when you start to think about it from first principles, whatever you call it, a point is still the most fundamental unit of reward. And we think that given how cemented loyalty programs and point programs are in Web 2 and how it's evolved in Web 3, we expect that we expect points to be the end state of incentives. And so, again, the name may change, but essentially you have a currency that you're given that has a claim to some airdrop, some pie. We think that model is going to persist through time. Airdrops will still be continued or will still continue to finance these incentive programs. And so there will continue to be this speculative energy around airdrop claims. So yeah, we think that points are here to stay, and Rumpel will actually help to unlock their value and cement their role even more.
Gotcha. Yeah, I tend to agree with you. Let me ask you this. In general, like we've seen some points programs that have gone very well. We've seen some programs that have gone the other way as well. Like, what do you think? What do you think the main like fundamentals are that drive a successful points program? I know I'm hitting you off the cuff, so feel free to answer as short or long as you want. But I'm just curious. I've been asking a lot of people this. Like, it's hard as a user to like really grade these points programs. I wish there was like a grading rubric, right, where you could grade these things in real time, but obviously it's hard to do. But what do you think are like some of the fundamentals that lead to a successful points program for a project?
Yeah, I mean, as cliche as it sounds, as much transparency as possible. Projects now. Projects are separated into two types when issuing points. One is pre-TGE, and the other one is post-TGE. With pre-TGE, it's harder to give a lot of info because it's just before the token has been announced. There is some risk with just things are changing all the way up until the TGE happens. So it's hard to be super transparent there, but something as simple as saying, hey, this is a season and these are the rules for earning points. These rules will not change, and this is when the season ends. That's like a very you're giving the factors for which someone can expect to earn points, and that is what users really want. They just want information. They want the ability to predict their ownership of a point pool. And when post TGE happens, or for post TGE projects, the project should be giving as much information as they can. So everything that I just said around the rules of earning points, there should not be any surprise dilution events. There should be an end date, and there should also be an airdrop season allocation as well. So one of the better point programs out there in terms of like the level of transparency that is given is EtherFi. EtherFi has done a great job at saying, hey, these are all the rules. Here's how long it's going to last, and then here's the airdrop allocation as well. And that makes it easier for users to price them. When a point issuer lacks transparency, as I was saying before, the best thing that can happen is that users can be overly optimistic. But the worst thing that can happen is they're just the exact opposite, and they apply a massive discount, and it just has less influence. So I expect we're still very much in this early phase of exploring what programs are most effective and why. And so I fully expect projects to converge around a reliable incentive construct that just works.
Yeah, I completely agree with all of the advice given here. No, I think it's a good conversation we've had, Kenton. It's a good time to wrap up. Before we do that, anything you want to tell the listeners as far as like Rumpel goes? Like, what are some catalysts on the horizon? What are some things that have got you excited for Rumpel moving forward?
Yeah. So the things that we are most excited about and the biggest unlock is enabling real yield on the highest point bearing strats out there. So we are about to announce, or by the time that this recording is launched, we would have already announced some of the latest like fluid Athena looping strats. Looping strats are not yet served anywhere else but us. And so being able to convert this levered point yield for like levered real yield is something that we're really excited about. And the second thing is automated point selling. So right now, as a point seller, you're earning points. You have to as a user actively mint point tokens and then sell them on chain. We will soon have utility code contracts and vaults that will automatically mint and sell your point tokens for you, creating a truly passive real yield experience. So keep your eyes out for that. We'll have it out in the next month or two. But until then, I'm on a Discord and Twitter at Kenton Prescott, first and last name. Hit me up if you have any questions or ideas.
Awesome. Really appreciate your time, Kenton. Obviously, for the listeners, check out our show notes. We'll have all the links to the socials as well, on where you can find Rumpel Labs. We also have some content, coming out on Aliyah research, for Rumpel, that you can check out, that'll help you along your journey and trying to figure out how you can leverage this as a user. And yeah, we really appreciate everybody tuning in, and we will see you on the next edition of Proof of Vision. Thanks, everybody.
Thanks, Kirk.
Yep.
See you.